Welcome to the Silent Trading channel. Today I'll be analyzing the gold chart on Tuesday the 27th of January, right? To see whether the price action right now is still on a bullish side or on a bearish side, right? But first thing first, before you guys watch, please subscribe, like, comment, and share if you like this video to support me in my trading journal. And to be with me in my trading journal and to learn something from me as I guide you on how I trade, right? Along the way that I'm trading, I'll be guiding you guys. I'll be giving you information on how I enter my position, on how I enter and how I manage my drawdowns, my position, right? So first thing first, today I'm gonna analyze the 4-hour time frame or the 4-hour candle. The 4-hour candle, as I say in my previous video, I've been telling you guys that there will be at least a drop down or an expansion downwards, right? An expansion below to clear off buy volume, right? And there was an expansion to clear off buy volume from yesterday, right? This drop over here, this dump over here was a dump to clear buy volumes, right? But wasn't able to break this support over here, this psychological support at 5,000. So since price wasn't able to break this support and price did a sharp dump below, right? A sharp expansion below before pulling back and wasn't able to break support and then start creating a reversal, right? A reversal was created, a reversal was produced, or you can call it a bullish price action. Then this bullish price action went and become complete in one move, right? A bullish price action is successfully created but completed also in one move because this candle over here push up, right, and do what you guys call a bullish engulfing. But I don't call this a bullish engulfing. I call this a successful and complete reversal, right? A successful and complete bullish reversal. So right now, the market is still in a bullish phase, right? But at first, when the price dropped down to clear volume from this week over here, actually I'll be buying at this week, but I'm not on the scene right, and I wasn't able to buy. So the next thing I want to do is I want the price to push up and close above this week over here before the next candle dropping down to create a bottom wick before I start buying. Or if I'm sure that the price action right now is completely bullish and I really want to have a buy position, at least wait for this price to drop a little bit further and then start buying at this current candle here, right? If the price push a bit further, start buying only one position for this zone over here in case the price dumps, right? In case the price dump on you and then the price went down to touch support, which means touching support also means accumulating buyers, right? Because it is triggering buy limits. So if the price drop down right now, you're gonna buy and wait for the price to start pulling back and then push up, right? And expand upwards. But if not, or if the price close red and the next candle create a green candle and went to push up and touch this resistance by triggering sell limits, by accumulating sellers and then start pushing up, this point of price action can also do it. Can also be a strong price action. But right now, if you're going to be buying, at least wait for the price to retrace. And if you're going to buy, you need to wait for something to show. You need to wait for price action to be revealed, right? If price is not revealing anything, we are not entering a position because that will be too risky, right? As I say, at this reversal over here, when this reversal was completed, the next candle, the next week, right? The next week creation over here, the next retracement over here, it is where we're gonna buy, right? But if you're not at this spot to buy, right, and you're not able to take profit at this spot, it is okay. Never mind, it is okay. It is not a wrong thing to do because you don't need to be playing, you don't need to be entering a trade all day. All you need is just 1 or 2 trades per day for you to be profitable, right? If you want to be profitable consistently, don't be trying to enter too many trades, because that will be increasing your risk. Enter as less trade as possible to minimize your risk, and each trade you enter should have enough criteria, or should go according to condition, right? Whatever condition you have in your mind that the market has to show before you start entering a trade, that will be the best for you to enter a trade, right? And after this, I will start revealing what I'm using to enter my trade, what condition, what criteria I'm using to enter my trade. I'll be revealing more and more after this, because right now you're not uh, you have not seen my video long enough to understand how I'm trading, because you need to get the basic understanding of how I'm trading before I can start telling you the best spot to enter a trade, right? So right now, all I can say is this price action right now is a bullish price action, and we are looking to buy more than sell. Because why? This price, right? You guys call it a support, a support, a demand, or whatever it is. I call it a key support, right? This is what I call a key support. Another name for it that I'm using is a foundation or base price, right? Foundation and base is the same. So a foundation or a base price is when price has cleared off buyers and sellers, has cleared off imbalance from the market before creating a reversal, and that reversal is the new foundation of the current market price, which means this foundation would have lots and lots of orders, lots and lots of limits waiting at this foundation or this key support, because by touching this support, which means buy limits are triggered. If buy limits are triggered when price comes to touch this support, price is gonna be dumping down further and further, right? So it all depends on what the price, what the market is doing at each and every moment, because I don't trade based on using names for each candlestick pattern. I don't trade using name based on each chart pattern. I trade using real price action based on movement from each candle. Every candle movement that I'm observing doesn't leave my eyes. I'm always observing. If I'm watching, if I'm looking at the chart, I'm always observing what the candle is doing. What it is doing, is it clearing? Is it accumulating? Right? Your version of accumulation and my version of accumulation is a whole lot different. My accumulation is I know where or what the market is accumulating. I am able to know that the market is accumulating buy volumes to dump on the buyers, or accumulating sell volumes to soar on the sellers, right? So if the market is going to expand, I will know it before. If the market is going to dump, I will know it before. But there are certain criteria or conditions that the market is going to dump, or going to fly, or going to break out above. So the market doesn't always move according to what it shows you. It moves according to the number, the quantity of orders and position on the market. If most of the market are buyers, right? If most of the market traders right now are buyers, the market or the institution is gonna manipulate the price to dump on the buyers. If most of the time the market, there are sellers in the market, there are retail traders placing sell position, placing short position, the market is gonna break above to clear off all sellers, which means you need to know that the market always has a way, and always will find a way to clear off buyers and sellers no matter what price it is at, right? So that is why I trade based on psychological relationship. I trade based on watching human psychology. I trade based on understanding basic human psychology. Those who didn't have those who didn't have too much experience on the chart, All they know is they need to buy at support, they need to sell at resistance, they need to long at support and short at resistance. That is all they know. So which means if you are placing an order, we need to place an order at where there are no short or long position. So if you're gonna buy, we're gonna buy at the place or at the spot that there are no long position waiting, no buy limits waiting, right? And if you're gonna go short or if you're gonna sell on the market, we need to place our sell orders at the spot where there are no sellers on the market, there are no sell limits, there are no short position waiting to sell. That is how you're gonna be profitable, because once the price goes to the spot where there are sellers and sellers start accumulating, you're gonna fail if you sell at that spot, right? And if market goes to the spot where there are buyers and buyers start accumulating, you're gonna fail if you buy at the same spot as others are buying, correct? Because most of the time the market is manipulated, and it is only manipulated when there are enough buyers and sellers accumulated in the market. The big money don't always manipulate the market, but they still manipulate the market according to how many positions or orders are in the market. And that is also based on whether there are more sellers or buyers in the market. So you need to be safe when you're trading, because these are all basic understanding that you guys always trade based on what ebooks, what other coaches are telling you. Buy at support, sell at resistance, or some of you sell at support because touching support means breakout, and then buy at resistance, right? Some of you enter trade using breakout. Some of you buy at support and sell resistance. But do you know that most of you who are not profitable are always in the wrong, but you're actually not in the wrong, but the market always has a way of clearing off your orders before going to the spot you want the market to go to. So let's say if you enter a buy position, you have placed your stop loss, you have placed your TP, you have placed your take profit, and the market goes to your stop loss first and then reverse and goes to your take profit. And then you start become frustrated if it happens multiple times, because you don't know what you did wrong for the market to go against you like this. But no, the market wasn't going against you, but the market is doing what it needs to be done to clear off buyers or sellers in the market before going to the designated price, right? So this is what you need to start doing. You need to do more research. You need to understand. You need to front test the market. Try placing orders in your mind, placing your stop loss and TP, and then try looking whether the market has gone to your stop loss or your TP, and then try using another spot to enter your position and then place your stop loss and TP, right? Or either start placing your orders or your buy limits at where other stop loss are at. Try doing this. You'll see a whole new different dimension of trading, right? So I will not be saying too much, but all I can say is right now the price action is still bullish. Don't be selling, don't start shorting, because foundation price has been created. Price is not going to drop. If price is going to drop, it is only going to drop to clear out buyers, which means if price is dropping, I'm buying. I'm not selling at this spot right now, right? Because price action is still strong and the price action is fully bullish. So I'm not selling at this spot, and don't be selling because you're going against the trend, correct? So for today, that's all I'm going to be saying. So please be safe. Please be safe. Please be profitable consistently. This is what I'm wishing you guys. And I wish you guys can get all the best, can get all the information you could get from my video. And please trade better and better with me, because I'm also training myself to speak better, to emphasize what I'm thinking better. And if I'm able to do it, you guys will also be able to do it. So that's all for today I'm saying. So stay tuned to tomorrow. See ya.